BlackRock, Vanguard, and State Street. Three companies you probably never think about, but together, they quietly own pieces of almost everything around you. Your phone, your car, your favorite coffee brand, even the house you live in. They don't make products, they don't advertise to you, yet they hold more power than some governments. How did we get here? So who are they? How do they work? And how did three quiet companies end up holding the keys to the global economy? And most importantly, what does it mean for the rest of us if three unknown giants already hold this much power? These companies are what's called asset managers. In simple terms, they manage other people's money. That money comes from pension funds, governments, businesses, and even you, if you have a retirement account or invest in the stock market. Instead of putting all that money in one place, they spread it across thousands of companies. Apple, Amazon, Tesla, you name it. This way, they don't own just one business. They own small pieces of almost everything. And those small pieces add up to trillions of dollars in investments. Now, this business model wasn't always this powerful. It really took off in the 1970s with a simple but revolutionary idea: index funds. Instead of paying experts to pick individual winning stocks, why not just buy the entire market at once? That idea came from a man named John Bogle, who founded Vanguard. Index funds were cheap, easy, and safe for long-term investors, and they exploded in popularity. Over the next few decades, trillions of dollars flowed into these funds, and the companies managing them, like Vanguard, BlackRock, and State Street, quietly became some of the biggest financial players in history. So why should we care if these companies manage other people's money? Because when you own even a small share of thousands of companies, you get a seat at the table. These asset managers have voting rights in the companies they invest in. That means they can vote on who runs those companies, how much top executives get paid, whether the company should focus on renewable energy or fossil fuels, and even how it treats its workers. Individually, you and I buying one or two shares doesn't mean much. But when a company like BlackRock or Vanguard controls billions of shares on behalf of investors, their vote carries incredible weight. On top of that, these companies don't just hold stocks, they also buy government bonds and manage pension funds, meaning they play a role in financing public projects, stabilizing economies, and sometimes even advising governments during financial crises. It's not that they set out to take over the world. Their power comes from simply doing their job, managing money efficiently. But when you manage trillions of dollars, you naturally have enormous influence on almost every part of the economy. Let's start with the biggest of them all, BlackRock. BlackRock was founded in 1988 by a man named Larry Fink. At the time, Fink had already been a rising star in finance, but had lost his job after a huge mistake in mortgage trading cost his previous company millions. Instead of giving up, he took that failure and built something new, a company focused on one thing: risk management. His idea was simple: use advanced data and technology to manage investments and avoid the kind of mistakes that had cost him his career. That idea became BlackRock, and it worked. Today, BlackRock manages over $10 trillion. That's more than the GDP of most countries. One of their biggest innovations is a platform called Aladdin. Think of Aladdin as the brain of global finance. It tracks risk and investments for governments, banks, insurance companies, and big corporations. Some say if Aladdin went offline for a day, global markets would panic. BlackRock invests in everything: tech companies, oil giants, healthcare, defense, real estate, and even infrastructure projects. They don't just manage money, they influence how companies operate and even how countries respond to economic crises. The power of BlackRock isn't flashy. You don't see its logo on your phone or your favorite soda can. But in the financial world, it's like gravity, invisible, but you feel it everywhere. Next, we have Vanguard. Vanguard was founded in 1975 by John Bogle, a man who believed investing should be simple and affordable for everyone, not just the wealthy. At the time, investing meant paying high fees to fund managers who tried to beat the market by picking winning stocks. Bogle challenged that idea completely. He created the first index fund, a simple product that doesn't try to beat the market, but rather matches it. Instead of picking individual winners, an index fund invests in all the top companies at once. It's cheap, low risk, and perfect for long-term savings like retirement plans. This single innovation changed investing forever. Suddenly, everyday people could grow their savings safely, and they didn't need Wall Street experts to do it. Vanguard became the pioneer of passive investing, and today it manages around $8 trillion. What makes Vanguard unique is its ownership structure. It's owned by its investors, meaning the people whose money is invested actually own Vanguard itself. That structure allows Vanguard to focus on keeping costs low instead of chasing high profits. But like BlackRock, Vanguard has huge voting power in companies all over the world. It doesn't matter if it's Apple, Microsoft, ExxonMobil, or Coca-Cola, Vanguard likely owns a piece of it. And that gives it a voice in corporate decisions that affect millions of people. The third company in the story is State Street. Unlike BlackRock or Vanguard, State Street has been around for a very long time. It was founded in 1792 in Boston, making it one of the oldest financial institutions in the United States. State Street focuses on custody banking and asset servicing, meaning it holds and manages other institutions' investments safely. And it's a major player in exchange-traded funds, or ETFs. One of its best-known products is the SPDRS and P500 ETF, one of the most popular investment funds in the world. Today, State Street manages around $4 trillion in assets. That's smaller than BlackRock and Vanguard, but it still places them among the largest asset managers on Earth. Here's where it gets interesting. Because these three companies manage money for millions of clients, they own small stakes in thousands of businesses. In fact, studies show they are the largest shareholders in over 90% of the companies in the S&P 500, which includes the biggest corporations in the United States. Think about that for a moment. Rival companies like Coca-Cola and Pepsi, Apple and Microsoft, or even competing airlines often share the exact same top shareholders. BlackRock, Vanguard, and State Street. That means even though these companies are technically competitors, they have the same owners behind them. And when the same few shareholders hold power across multiple industries, they have an outsized influence on how those industries operate. It doesn't mean they're running every business day to day, but their votes and influence shape executive decisions, corporate policies, and even long-term strategies. Whether you drink coffee, stream a movie, or use your phone, chances are these three companies benefit from it. So, do three companies rule the world? They might not run it like kings, but they definitely hold the keys to it. Tell me, what do you think in the comments? If you found this video eye-opening, make sure to hit that like button, subscribe, and turn on notifications.